listening to Turning Hard Times into Good Times with your host, Jay Taylor. If you have a question or comment about today's show, Jay would love to hear from you at 1-866-472-5790. That's 1-866-472-5790. You can also send an email to questionsfortaylor@gmail.com. That's questions, the number 4, Taylor@gmail.com. Now, back to our program.
Welcome to a special edition of Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Chen Lin, who publishes a premium newsletter titled What is Chen Buying? What is Chen Selling? And if you'd like to subscribe to Chen's letter, you may do so during the first 2 weeks of this year. However, you do need to put your name on a waiting list first, and then you will be receiving an email during the first days of the new year. Chen accepts new subscribers only during the first 2 weeks of each calendar quarter. So if you'd like to sign up for Chen's letter, go to miningstocks.com, and you'll see a place there where you can put your name on a waiting list, and you'll be contacted, as I say, during the first few days of 2016. Well, thanks for joining me again, Chen. It's good to have you with me.
Thank you, Jay.
You know, you put out a very interesting piece, I think a very important piece, regarding energy and your outlook for energy in 2016. You sent that out to your subscribers a couple of weeks ago. You know, in your report you didn't talk too much about oil. You concluded, actually, that you just aren't at all certain about when we're going to see the bottom for oil. Could happen in 2016, but at this point you can't call that. What would you need to see, Chen, that would cause you to be somewhat more bullish on oil? What would cause you to turn bullish?
We'll have to see some production, going down, right, in the United States and in the rest of the world. Those high-cost wells start to dry off, and then and then demand start picking up more as oil prices, like low oil price and record driving miles in the United States. Mm-hmm. So those are the interesting factor of oil is, right, it's a commodity, right, and it's pretty hard to store, right? Think about it. You have right now the country is awash with oil. The world is awash with oil, and the storage tanks most are getting close to full, right? And in the meantime, Saudi continue to pump for their own reason. They pumping as much as they can, and so there's no way to put all these container ships are filled. Most of them are filled, right? So it's getting a very interesting situation as oil always pricing at the last barrel.
Yeah.
So that's I think. I had a bearish point of view of oil for 2 years.
Yes, you did.
2013 I felt bearish. 2014 I turned more bearish. When oil started to crack in September, I told my subscribers to get sell energy positions. But right now, what I see is 2016 could be one of the most interesting and exciting years for energy investors. If for people who are interested in energy at all. Mm-hmm. Yeah, we could have a very sharp drop. And gold might go for $20.
Yeah.
Right? I mean, it's possible. They were calling for 150, I think, a few years back. So, so they didn't reach 150, but it went to almost 20, right?
Yeah, sure. Yeah.
So they call for $20. They could go to 25. I mean, right?
Yeah.
But that would be a great opportunity, great once-a-lifetime buying opportunity.
Right. So you're keeping your eyes on oil, the fundamentals. Any speculation as to why you think Saudi keeps pumping? Chen, I saw a report the other day of a tremendous number of ships that are just floating around out in the Atlantic. In fact, some leaving Houston going for Europe, and halfway in the Atlantic they turn around and head back to Houston, back to the United States. Incredible. And these ships are just, hundreds of them sitting out there, loaded with oil, no place to go. They can't unload because they're full up at the docks. So it's incredible. But why do you think that Saudi Arabia keeps pumping? I mean, it seems ludicrous. Are they trying to put the oil sands guys out of business, the frackers out of business in the U.S.? Is that what's going on? Yeah,
it's based on one stone for quite a few birds, right? They don't like Iran. Iran going to open, allow to export.
Right.
In a couple of months, so they want to hurt Iran as much as they can. They want to hurt the frackers. They want to hurt Russians. So it's like a perfect situation for Saudi. One stone for three birds, and maybe a few other things, to as well as the rest of the world. So Saudi let people know who are the king in the oil field.
Oh, well, it certainly is good for the consumers right now with lower gas prices. I think gas prices in the U.S. Cracking $2 even in some places. So, but it is an interesting opportunity, Chen. You're right. I mean, I think we keep our eyes, and I'm going to be watching what you have to say about oil coming into the new year, and I'm sure you're going to be looking for an opportunity to buy things really cheap. But even now, according to your report, natural gas offers some possibilities here and there in specific markets. What about the natural gas markets, and what is going on? Can you talk about what the fundamentals are that make certain natural gas markets more attractive than others?
Yeah, sure. The fascinating part of natural gas is it's very hard to ship, right? And you have to liquefy it and through LNG boat and de-liquefy. At the other end, the total cost is $4 per MCF. That's the shipping cost. So basically, even in the United States and Canada, we're washed with natural gas. When natural gas may fill up the storage this winter because it's so warm.
Yep.
In many parts of the world, there's a shortage of natural gas, right? And because natural gas is so expensive to ship, actually the local price is very high. As I put in my report, there's a spot of area on Earth that has very high natural gas price and then still going up. And I believe the $6 MCF, is a very reasonable price. If you look at it's very competitive to liquefied natural gas because it's $4 shipping cost, and also very competitive to diesel. Think about the diesel, the $6, it's about $30 oil, right? So, right now it's still 35. Even it dipped below, it takes a while to switch anyway. So it's still $6 is a very competitive price, long-term natural gas price. Okay, but if you have a natural gas field, that the cost is about between $1 to $2 if you do fracking. Some frackers $3. Right now, the United States natural gas price $2 is really marginal cost for the fracker.
Sure.
But in the rest of the world, if you have $1, $2 cost, you sell for $6. My goodness, you're in heaven because most of the energy companies are not making money. Right? If you look at the Exxon, you look at the Shell, look at all these largest oil companies, they are really borrowing money right now to pay for the dividend, to pay for the capital. They're not making money at this current oil price, and they're probably not going to make, in most part of 2016. So my point is, you're looking for the specific company, right, that can enjoy still sky-high margin at specific locations in the world, around the world. Right? And those companies will benefit because they will make money, they will increase their balance sheet, the cash flow more, they will have more chance. They'll go out to buy from bankruptcy court, right? As I put in the CEO letter to one of the CEOs recently. They can go out and buy assets at dirt cheap, and then in the meantime, the oil asset is valued at zero. But we know one day will not be zero. So when oil rebound, it's like a free option, right? So that's what I'm quite excited, and I see those very very unique opportunity right now. So you don't need to worry about oil price. Well, you can sit tight and wait for the situation to develop, right? When things change next year, then maybe we will go find some companies, there will be a lot of opportunities if oil turns around.
Sure.
We saw that when oil turned around 2009, how well I did. Right?
Oh, exactly. Yeah.
Same as the gold. So when they turn around, there will be a huge opportunity. But right now, instead of picking the bottom, I'm just sit tight and wait while holding, certain very, very selected energy stocks.
You're right. Let's talk about a couple of those, if you don't mind, Chen. I know that you do keep your premium subscribers up to date on your on your picks, and I think it was a couple of weeks ago, you mentioned one that you've liked a long time, one that I've included in my newsletter as well, Pan Orient. They have natural gas production. I guess they're a fairly low cost producer of natural gas.
But they discovered natural gas in Indonesia, in Sumatra Island, right? They recently just discovered, and the stock wasn't really response at all, right? So they were just went up initially and then come down because everybody's selling, especially right now, December, people are selling for tax loss.
Sure.
So its funny part was that they are trading at below cash. So,
are they now, Chen, at this moment?
Yes, well below cash. Yeah. I think at least 10, 20%. They change it all the time because of the exchange rate. They put money in U.S. dollar, but they're trading in Canada. So,
yeah.
So actually, their cash are increasing every day because of the dollar.
Yeah. Interesting. Yeah.
But then the part is they're below cash. They have an oil field, a low-cost oil field in Thailand, which is generating decent oil revenue and cover most of their G&A. They find the natural gas in Indonesia, and then they're going to try to monetize it. The company has a history of discover and sell and then pay dividend. They pay 75 cents dividend not long ago. They're going to pay another 40 cents dividend in February, about less than 2 months from now. The stock is trading 40 cents is Canadian, right? Stock is trading 118 today. I see. You got a 35%, 30 something.
Yeah, that's 118 in U.S. money, right, Chen?
No, it's Canadian dollars.
In Canadian dollars. Wow. Okay. Wow.
I'm talking about Canadian. So 118 in Canadian, probably 80 something cents U.S.
Wow.
And then they will pay 40 cents
Canadian. Yeah.
Canadian, right? So they could pay 1/3 in dividend, and then they're looking to sell the Indonesian asset. The market right now, looking at this, is treating it as if it's worth zero, right? So the funny part is, that's what I see opportunity, right? They sell the asset, which they've done many times. You look at the company history, they sold. So if they sell that, they will have another dividend. Right. I mean, and then you just count it. I mean, they're selling another asset, the oil sand project in Canada, and it's oil sand's really down. Nobody like it, but still, Canadian oil sand, there's a takeover battle over there. So it has to worth some money, right? It doesn't worth $100 million. The company looking for a year or two ago, maybe worth a small fraction of that. But look at the company's market cap is $50 million, right? If they can sell for $20 million, it's still a big boost. I mean, you got another dividend.
Yeah, exactly.
So it's very funny. It's funny part. It's this company. I see it potentially worth just added the cash and then some of those parts with at least $2 or more.
Oh, interesting. All right.
It's mostly cash neutral, right? And then they have a drilling opportunity coming. It's paid by Talisman. Talisman is already purchased by the Spanish company Repauso. I don't know what exactly Spanish to spell that, but the Talisman, they're going to carry $10 million next year to drill the well. I mean, for this big company coming to drill that, it tell you it has a good opportunity. So they got to carry $10 million to drill. I mean, that's another big opportunity. I discussed in detail in my newsletter.
Sure.
So I think that those are not pricing. So basically, right now it's tax loss selling. People just want to get rid of energy stock, and I see tremendous opportunity. For those people who have a little bit long-term vision, there are tremendous opportunities.
All right. Well, that's Pan Orient, trades in Toronto under the symbol POE, and you can buy it in the U.S. as I have under the symbol POEFF. POEFF. And another one that you like a lot, Chen, is Canacol Energy. I guess they're in Venezuela, right? Could you talk a little bit about that? Why do you like that one?
No, it's not in Venezuela.
Oh.
It's in Colombia. Venezuela is a different story. You must be confused with the old one. I used to have a Venezuela company. I was hoping takeover to materialize.
Oh, okay. All right. Well, you would have.
The government has to reject a takeover.
At this point, you wouldn't be holding anything in Venezuela, I guess.
No. Their company is on the edge of collapse. Actually, once that happens, revolution happens, it will be positive to oil price. There's so many factors you can see in 2016 actually make it very, very exciting. But anyway, this company is in Colombia. Okay.
Yeah. Okay.
Colombia actually has a natural gas shortage. Colombia has you can see as I put in a detailed letter, that had detailed graph of the Colombia natural gas price, and you can see in the past 3 years it just has been one direction going up. Right, next year it's $6. Right, so for this company, conventional natural gas producer, the cost is about $1. So they're going to generate tons of cash flow next year. Right, the new pipeline should start at the end of this month. Right, so they will quadruple their natural gas production in the next few months. I just talked to the CEO last week. I mean, they are still very cautious, optimistic that everything will be on time. But of course, Colombia is, their entire pipeline company. They already delayed it once. Maybe they will delay it a few more weeks, but it's not that off, right? So that's the bottom line is. So once they turn on the natural gas valve, there's huge cash flow. You're looking at $100 million, at least $100 million a year cash flow coming in. The company will generating cash, will pay down the debt. I have a detailed discussion with the CEO. I put in my newsletter, right? I tell them that what's the goal for 2016. They're still looking for 2016 budget. They are really, really looking at a very, very interesting part. How to pay back debt. I'm very glad he already thought through that, which part debt to pay back first and how to pay back first. And that is not very heavy. It's like 200-something, 50 million. But if you have 100 million per year free cash flow, it's very, very serviceable. That's part. And then they have, they're looking, what they're looking, and there's a lot of opportunity there. They just bought out of bankruptcy court. That's last year, Baristas, OGX, right? They bought out of the bankruptcy court, and then they seem to be quite interested in other bankruptcy proceedings as well, which is very good. Yeah. It's very smart people, right? Similar as Pan Orient, they're all very smart investors. They keep a lot of dry powder, and then they buy it from, fire sale in the bankruptcy court. Right? Sure. I mean, OGX, that concession right now could easily worth $1 billion. Right, they bought it, and they bought for $10 million. Right, so you said that it's unbelievable. So you can get those unbelievable deals right now because all the company going bankrupt. Wow. But anyway, so they already start the thinking process. What to do with the cash in 2016, and then the market cap of the company is 200 something. 200. I don't have exactly
around 200 million plus a little more than that.
Yeah, around that 200, 300 million because it's changed so much. I mean, a few days I'll tell my subscriber to buy it, dropped to 2.2 Canadian.
So what you're talking about, Chen, here is free cash flow in excess or around the price of the company or the market value of the company now.
Oh no, free cash flow the price to.
Oh, 100 million, about 100 million.
100 million, right.
And they're selling, and the market cap's around 200 million.
200, 300, 200, 250. So, I mean, it changed so much. It changed, it changed like 50%, 30, 40% in the past few weeks because people are selling energy. I think some funds are going out of business, so it's a really, really good opportunity. Okay, it's not just in energy. All the other sectors I'm so excited about right now is there's a lot of stock, a lot of company in this sector, and people just tax loss selling. They just get out of it, but it is tremendous value. If you look at for a little bit longer term, this is tremendous value out there. But anyway, for this company, you don't need to worry about oil price, right? They have oil block. Who's exploring? Canacol Phillips is exploring. I mean, they are paying whatever 50 or there's a PR came out a few weeks ago. Putting my newsletter. I forgot the exact number. They're putting like 50 million to something like that for next 7 years. For exploration, those are big oil well. Okay.
So is Canacol getting carried on that, Chen?
Free carry, yeah. They got all these concessions earlier, and then the Canacol, Shell, and all the Exxon they came in. They said, we want your concession. So give me free carry. So the deal was pretty smart. They said, don't need to spend any money on that.
Wow.
And then they do all the drilling, but that's a free core option, right? And you think about it, even on natural gas assets. You look at that, it's undervalued. But if you have all the oils coming in place, and then you think about what top management has done in the past, right? So they can pick up the asset from bankruptcy court. All these, you look at the other Columbia companies, I mean, many has really stock are down 95% or something, all these, they have to rearrange with lender or another, so there will be a lot of fire sale coming. So they are in very, very good position, and they have a lot of working capital, and then they have a lot of cash flow coming. Right? And so once you do well, you know that, right, commodity business, once you do well, all the bankers want to lend you more money. So actually they can potentially consolidate the whole area. Right?
Wow,
so that's the thing. It's quite exciting. So the thing, Jay, I mean, I've been investing for decades. I mean, this year is very, very interesting. Right now, December, the tax filing is very, very interesting. I'm quite excited. There's so many good opportunities out there. Just if you really have a little bit long term, you look at it, if you have a 1 week point of view.
That's not so good. No, I know.
But if you have a little bit longer term, there's a lot of value.
A lot of opportunities. Well, what I like about you, Chen, is when you dig into these things, you find something that's really exciting. You're like a kid in a candy store, kind of, and you find these opportunities, and you just can't stop talking about it because you love it, and you put your heart and soul into it. You study it hard. It's not like it's something you haven't thought deeply about. I know how you operate. You look at lots of different companies. You got a lot of them on your radar screen, and then you sort of focus in like a laser on those that start to give you opportunities. That's what makes you, I think, you and your service so valuable. So you're really giving us something to think about, Chen. I look forward to keeping up with you on these stocks. Of course, people that subscribe will know instantly as soon as you put out your information, and that's how you can best take advantage of Chen's intellect and his hard work. So anything else you'd like to share with us today, Chen, before we conclude this discussion?
No, that's pretty much it. So I just feel it's really a lot of very, very good opportunities out there, and 2016 should be the exciting year.
Good.
Very exciting.
Excellent. Thank you, Chen. I need to talk to you as a gloom and doom gold guy. I need to talk to you. You have some exciting things going on in the biotech space as well. The most thing, what I think is really good about you is you're finding ways to make money, and you're not sort of sealed into one sector. And God only knows, you come up with some other sector that you've never been involved with before, perhaps next year. You never know with you, and that's what makes you very interesting. Always a pleasure, Chen, having you with us. Thank you so much for talking to my listeners again, and we'll look forward to doing it again, hopefully in another week or two. Thanks so much.
Okay, great. Thank you, Jay. Appreciate it.